Hey guys, Jacob here with the Trade Table, and today we are going to be talking about uptrends and downtrends and how we use them in our trading. Now, the great thing about uptrends and downtrends is that you can use them on intraday charts, but you can also use them for a long-term investment. Like for here, I have the day 1 year chart of Tesla, but I could very well take the 1 day chart of Tesla and I could pick out some uptrends and downtrends, but I thought this had better examples, so I'm going to go with this. So what a downtrend is essentially is you can, if you're in Thinkorswim, you just go to drawing tools and it's going to be that tool right there. And you can just connect the series of highs and the series of lows. And if it's in a downtrend, then you'll see the um, the lows getting lower and the highs getting lower, and vice versa. If it's an uptrend, you'll see the lows getting higher and the highs getting higher. Now, it's kind of up to you what you want to do with this bottom line. I choose to put it right here because you can see a steeper drop off versus a lot of people. Let me remove this. Would do something like this. There we go. And kind of ignore these couple of lower lows and consider them outliers because you can see here the trend has really been resisting at this area. So it's kind of up to you how tight or how loose you want to make your downtrends. That's a judgment call. But anyways, for uptrends, you can see right here, I'm going to ignore that really big drop off right here. And you can see right here, we have an uptrend right here, and it gets broken. And how do we know when a trend's going to break? So typically, if we think a trend is going to break, what'll happen is it'll break through, and then you'll see a candlestick, something like this. You see how this tried to break back up, and it got up through the trend, but it couldn't quite make it up and all the way through and stay. That's your sign right there that the trend is broken and that it could start trending in a different direction because it tried to break up and through and prove this as a false breakdown, but obviously we see that it couldn't and it continued to fall off. So that could be a beginning of a trend reversal or a downtrend. Another good little trick to do that is here. Let me use the downtrend as the example here. So if this were to break up, how would I know that it's not a false breakout? And the answer is, well, the shorter answer is you can't. But if you see here, this is your last high. If it is going up and it breaks through here, and then it breaks up through the old highs, like it breaks up through here and it breaks up through that high, and then it breaks up through that high. So if it's around this 200-day moving average, that's a really, really good sign for you guys. So that's a good way to tell if it's not a false breakout. You'll have to wait a little bit longer to find out, so you could miss out on some profits there, but it's a better way to be sure. So it just kind of depends on your tolerance for risk and what you want to do. If you're a more risky investor, maybe you buy around here when it pops up, but you could lose money on the downside there versus you could also make a lot more money if it goes up. So that's just kind of a judgment call there. If you have any questions, just let us know in the comments. That's going to wrap it up for today's video. Leave us a like and subscribe if you liked the video. Leave us a comment below if you didn't like the video. Let us know why in the comments. Thank you. Bye.